Hello everyone, welcome to my channel. Today I'm going to talk about how to track cash flow correctly. Cash flow is the lifeblood of every business. It does not matter whether you are a freelancer, a small business owner, or managing a growing company. If you do not know where your money is coming from and where it's going, you are flying blind. Many businesses fail not because they end profitable, but because they run out of cash. The good news is that tracking cash flow does not have to be complicated. With the right habits and a simple system, you can stay on top of your finances, avoid surprises, and make smarter business decisions. I'm going to go over how to track cash flow correctly. What is cash flow? Cash flow is the movement of money into and out of your business. Money coming in is also called cash flow. This includes customer payments, loans, investments, refunds, or any other money your business receives. Money going out is called cash flow. This includes rent, payroll, utilities, inventory, purchases, loan payments, subscriptions, taxes, and operating expenses. When more money comes in than goes out, you have positive cash flow. When more money goes out than comes in, you have a negative cash flow. The goal isn't just to make sales, it's to make sure enough cash is available to keep your business operating smoothly. Separate business and personal expenses. One of the biggest mistakes business owners make is mixing personal and business expenses. Using the same bank account for groceries, entertainment, and business purchases makes it nearly impossible to understand your true cash flow. Open a dedicated business checking account and use it exclusively for business income and expenses. This simple step makes bookkeeping easier, improves financial reporting, and helps during tax season. Record every transaction. Cash flow tracking begins with accurate record keeping. Every payment received and every expense paid should be recorded promptly. Do not rely on memory or wait until the end of the month. The longer you wait, the more likely you will miss important transactions. Using accounting software can automate much of this process by connecting directly to your bank accounts and credit cards. If you prefer spreadsheets, make it a habit to update them daily or weekly. Consistency is more important than the tool you choose. Review your cash flow regularly. Many business owners only review their finances when tax season arrives. That's far too late. Set aside time every week to review your cash flow. Ask yourself, how much cash came in this week? What were my biggest expenses? Are customers paying on time? Are any bills due soon? Do I have enough cash to cover next month's expenses? Weekly reviews help you spot problems before they become financial emergencies. Monitor your accounts receivable. Sales do not improve cash flow until customers actually pay. If clients consistently pay late, your business may struggle even if revenue looks strong. Track outstanding invoices carefully. Send invoices immediately after completing work. Include clear payment terms and follow up politely on overdue accounts. Offering small discounts for early payment or accepting multiple payments method can also speed up collections. The faster cash enters your account, the healthier your cash flow becomes. Watch your expenses. Tracking cash flow isn't only about monitoring income, you also need to understand where your money is going. Review expenses by category each month. You may discover subscriptions you no longer use, unnecessary software, excessive dining expenses, or suppliers charging higher prices than competitors. Small recurring expenses can quietly drain thousands of dollars each year. Cutting unnecessary costs improves cash flow without increasing sales. Forecast future cash flow. One of the smartest financial habits is forecasting. Instead of only looking at today's bank balance, estimate what your cash flow will look like over the next 30, 60 to 90 days. Consider expected customer payments, payroll, rents, taxes, loan payments, equipment purchases, and seasonal changes in sales. Forecasting allows you to prepare for slower months instead of reacting when cash flow becomes tight. Businesses that focus regularly make better financial decisions because they know what's coming. Maintain a cash reserve. Even businesses with healthier cash flow experiences unexpected expenses. Equipment breaks, customers delay payments, sales fluctuate. That's why every business should build a cash reserve. Aim to save enough cash to cover at least 3 to 6 months of essential operating expenses. These reserves provides peace of mind and allows your business to continue operating during difficult periods without relying on expensive debt. Use cash flow reports. Your profit and loss statement tells you whether your business is profitable. Your cash flow statement tells you whether your business has enough money to operate. Review cash flow reports monthly to understand how money moves through your business. Pay attention to trends rather than individual months. If cash flow has been declining for several months, investigate the cause before it becomes a serious problem. Good financial decisions begin with accurate financial information. Track key cash flow metrics. Beyond your bank balance, monitor important financial indicators. Watch your operating cash flow, which means the cash generated from normal business activities. Track your accounts receivable turnover to see how quickly customers pay. Monitor accounts payable to ensure bills are paid on time without paying too early. Review your cash conversion cycle, which means how long it takes to turn inventory and receivable into cash. These numbers provide valuable insights into the health of your business. Automate where possible. Technology makes cash flow management easier than ever. Modern accounting software can automatically import bank transactions, categorize expenses, generate invoices, and send payment reminders, and create financial reports. Automation reduces manual work while improving accuracy. It also gives you real time visibility into your financial position instead of relying on outdated information. Avoid common cash flow mistakes. Many businesses unknowingly create cash flow problems through poor financial habits. Common mistakes include ignoring unpaid invoices, overspending during profitable months, failing to budget for taxes, purchasing equipment without considering future cash needs, mixing personal and business expenses, not reviewing financial reports regularly. Avoiding these mistakes can significantly strengthen your financial position. In conclusion, I would say tracking cash flow correctly isn't about becoming an accountant. It's about understanding your business well enough to make confident financial decisions. When you consistently record transactions, monitor expenses, forecast future cash needs, and review your financial reports, you will gain complete visibility into your business financial health. Remember, revenue is exciting, profit is important, but cash flow keeps your business alive. By making cash flow tracking a regular habit, you will reduce financial stress, improve decision making, prepare for unexpected challenges, and create a stronger foundation for long term growth. The businesses that thrive ain't always the ones with the highest sales. They are the ones that know exactly where their cash is going and make every dollar work wisely. Start tracking your cash flow today, and you will put your business on the path to greater stability, smarter growth, and lasting success. Thanks for watching this video, and do not forget to subscribe to my channel.